Welcome to Retiring Well, where it's our job to help you enjoy financial security in any economy. Well, we have got a great show lined up for you this week. We're talking about the hidden expenses, the hidden costs that are all over the mutual fund landscape. You're going to love this. Sit back, relax, and enjoy today's show.
Retiring Well, providing financial security in any economy. Today is the day you can take control of your financial future and eliminate worry about your money forever. Retiring Well, featuring retirement planning specialists Robert Russell and Curvin Miller of Russell & Company in Dayton, Ohio.
This week, we're talking about all those hidden fees in mutual funds. Really important stuff. But remember, I always want to start off like I do every week by reminding you, why do we do this show? We do it because all the messages you're getting from mainstream financial media, from the Wall Street firms, the big banks, the CNBCs of the world, it's all driven towards growth and accumulation. It's not driven to help you with your retirement planning. Retirement planning is a lot different than just growing a portfolio. Purpose of this show is to give you a different perspective, give you some different thoughts as to what works, what actually works in retirement, so that you can be comfortable even if another 2008 hits. All right, so hidden fees in mutual funds. That's what we want to talk about this week. And there's this big article out from Barron's, and they're talking about a big study that happened where they were saying, hey, there are fees going on in mutual funds that are above and beyond what the prospectus tells you. Now, I know what's happening. A lot of you watch prospectus, you read the prospectus, and you say, okay, these are what the fees are. But you know what? That's only part of the story. And you know what that brings up? This week's topic of the week. All right, I'm here with Rob and Curve with Russell & Company. And guys, we talk about this all the time, that there are all these financial tools out there, in this case mutual funds, that have hidden fees. And I know you don't like them, I don't like them. And here we have Barron's, with this article talking about a study where they're uncovering all these hidden fees in mutual funds. So they're specifically talking about mutual funds. I'm wondering if you could take a few minutes and share with our viewers what's going on in this article and how this all works. But maybe also talk about, are there other financial tools out there that also have hidden fees? Fees that our clients, that the folks out there need to watch out for. Guys, take it away.
So we're talking about how mutual fund fees, those that you know and those that you don't know about, can really hit you in the pocketbook, or more importantly, in your retirement savings account. So this report and this article that came out, they disclosed how the average prospectus for your mutual funds that you own shows that the fee is 1.19% on average, 1.19%. And so many advisors, so many investors think, well, that's not a bad deal, 1.19%, not too bad. However, that's not the entire story, because there's several different other layers of fees that are not disclosed, including transaction costs, which in this report shows that another 1.44% on average is going out to cover these transaction costs of buying and trading and that kind of thing inside the mutual fund. And so if you add those two up, you're talking about 2.63% a year on average. So on a $1 million account, that's $26,000 going out the window, whether you make money or you lose money. $26,000 out the window every year. Over 10 years, that's $263,000 in fees. I bet that could make a big difference in your retirement plan if you had that back in your account.
Well, and usually that's before management fees. I mean, so oftentimes we see, advisors saying, well, look, we'll have this managed portfolio of mutual funds. And now all of a sudden you have managed money in the mutual funds being managed by a money manager. So, I mean, if you add that, what's the average management fee? Maybe another % on top of that. Mm-hmm. That's unbelievable. And see, the thing is that buy, hold, and pray doesn't work anymore. The markets are volatile. They're not going to go up forever and ever and ever, but and especially as you get near retirement, you really need to make sure you understand what kind of risk you're taking and whether or not a managed portfolio of mutual funds is right for you from a risk standpoint, but also from a fee standpoint.
Yeah, no kidding. Mutual funds are basically just a black box. You put money in and you hope to God money comes out on the other side.
Yeah.
Unfortunately, it doesn't always work that way. How many times have you been into your bank or credit union and you've seen, or even your advisor's office, and you've seen those posters where you invest in this fund and it just goes up and up and up for decades, but that was never your experience. It all comes back to the fees. And mutual funds, just like variable annuities, they bleed money because they're so darn expensive to own. And you could talk about closed-end funds as well. So if you're familiar with a closed-end fund or a fund of funds, which talk about a duplication of effort. Right? You could have a mutual fund that owns a whole bunch of other mutual funds. You just tacking on fees on top of fees on top of fees. Everybody's getting paid but you. Yeah. So, there's better ways of doing things and keeping more money in your pocket.
Well, more efficient ways. And, like we talked about mutual funds, variable annuities also fit in here because essentially what they have is mutual funds inside of them. They're called sub-accounts, but they're essentially mutual funds. And what's happening is not only in mutual funds do you have the expenses that we just talked about, all these invisible costs, but in variable annuities you also have insurance costs in addition to the mutual fund cost. So I was just meeting with a client. It's 3.55%. And total fees inside their variable annuity. Unbelievable. And we didn't have to pull up the prospectus. We can call the company directly and then ask really 4 questions. What are these certain fees? And then you total them all up. And it's eye-opening for most people to see what they're really truly paying. And so there are, like Rob, you had mentioned, there's more efficient ways to be investing. There's for instance a managed portfolio of exchange traded funds or stocks. If you know it's not that black box that you talked about, you actually know what's inside your portfolio because you can see it on a statement. Well, if you're going to own a particular stock, it doesn't cost anything to own that stock. But the whole idea is that you have a team of money managers who are professionally watching the market, making sure they understand your risk tolerance, your tax, your tax situation, and can have a portfolio that's going to be designed custom for you, not for somebody else.
Yeah, that's for sure. So don't you deserve to know how much is going out of your retirement account in fees every year or every day for that matter? Well, listen, give us a call. The number's at the bottom of the screen. If you have at least $250,000 or more, this could be a problem for you, that you're paying too much in fees. So let's sit down real quick, find out, do an x-ray, do a stress test to see how much in fees are going out of your account. And maybe you're in good shape, maybe you're not, but don't you deserve to know? So give us a call at the number at the bottom of your screen, and we'll sit down with you and help expose all that and put you in a better position.
Rob, Curve, as always, that was fantastic information. And folks, I don't know about you, but I just find it shocking how many people don't even try to find out what they're paying their money managers. I mean, how in the world are you supposed to know whether your money managers are doing a good job for you if you don't even know what you're paying them? But you heard Rob and Curve, they will make it easy for you. They are willing to run an objective third-party analysis to find out exactly how much you're paying your money managers, provided, of course, that you have $250,000 or more saved for your retirement. So if you qualify, what do you need to do? Well, it's really simple. You know the drill. Pick up the phone. Call the number on the screen. Leave your name and number. And within a day or two, someone from their office will give you a ring. They'll set up a time where you can talk to them, and then they can walk you through the steps that you need to take so you can get this free analysis that tells you exactly what you're paying your managers. Super important information. It's information I believe you deserve to know. So, what do? Call the number on the screen. Get that done. All right, don't go away, because coming up, I know Rob and Curve have a great story to share with you.
You're on the back nine heading for the clubhouse. Your dreams of spending time with family and enjoying retirement are just within reach. What happens if you end up in the rough? In these uncertain times, it's crucial to be prepared with sound advice. Russell & Company is one of the area's premier retirement planning specialists. For a complimentary consultation, call 1-800-392-4378. Russell & Company, helping you create a winning strategy.
Welcome back. This week we've been talking about, all those hidden fees that are out there, whether they're in mutual funds or variable annuities and other types of investment tools. And we've been talking about why it's so important that you know and that you understand, how much you're really paying your money managers. Well, I want to turn the page here a little bit because Rob, Curve, we were talking the other day and you were telling me about a family that came to see you, and apparently they thought they were paying, well, almost nothing in fees because there were really no fees on their statements. Well, you ran this objective third-party analysis we've been talking about, and you found, from what you told me anyway, that the real story was a little bit different than the one they first gave you when all was said and done. Why don't you go ahead and take it from here and share that story with our audience out there?
Hey, thanks, Mike. We'd be happy to share some of the stories that we have from people who are paying, or who actually have a perception that they're not paying a lot in fees. All the time. I mean, at least once or twice a week do I meet with somebody who has no idea what they're paying in fees. And if we all agree that it's what's after fees that really counts as far as return is concerned, these stories, and understanding the importance of understanding the fees is ideally why we're talking about this. Rob, you told me a story that just blew my socks off. A client who was actually paying at the end of the day 3% that they had no idea about. Why don't you tell our viewers about that?
Yeah, so we had Joe and Nancy, we'll call them Joe and Nancy, came in here just recently, and they were just trying to look for a better understanding of their risk profile. How much do they have at risk? They wanted to know their fees. Are they paying too much in fees, or was it reasonable? And also they wanted to make sure that they had a legacy plan for whatever's left over to stay in the family. So here is the actual mutual fund analysis. So we can do the same thing for you, a mutual fund fee analysis, and here's the actual analysis from Joe and Nancy. So you can see they got a page and a half of mutual funds here. And in their retirement accounts, they were able to save up $700,000. And at the end of the day, when you calculate all of their true fees, they're paying 3.04% a year. So $21,000 a year are going out of their account. Most of it they don't see, but it's going out of their account, unbeknownst to them, and not back in their pocket. And that's whether they make money or they lose money or they stay flat. Now, to compound the problem, they also need income. They need income from their investments. So if they have 3% going out in fees, and let's say they take another 3% out just to live off of, 6% a year?
Wow.
That's a problem. That's a recipe for disaster. And here's the thing too, their annual return, their average annual return on this portfolio over the last 5 years was 8.5%. Not too bad. 8.5? I mean, I think a lot of people would take 8.5, but they've got 3 going out in fees, 3 going out in income. So with inflation, they're going negative. They're going negative. Wow. And that's how folks just like you and Joe and Nancy, that's how you run out of money in retirement.
Well, yeah, and funds have a cost of ownership, and there's all these transactions we talked about before, all these costs that are coming out before management fees. One of the biggest misconception that I see is that people say, "Oh, look, I'm paying my manager a 1%, and I'm cool with that. He's doing a good job. He's meeting with us once or twice a year, get 1%. We're fine with that." But what they don't realize is that the cost of ownership of a mutual fund, compounded with that management fee, can really add up, especially when you have to take income. And listen, if you're nearing retirement or in retirement, one of the most important things in retirement is income. That's the whole reason you save the money. Is you sacrifice all these years while you were working to get to a point where you could have a pot of money that you could take income from. And when you have all these fees associated also with a reasonable withdrawal rate, I mean, 3% is not that bad. You know, a lot of people we meet need more than 3%, you know, income. And when you start adding fees and tax implications and all these things on top of each other, you do go negative, especially when you look at inflation.
You know, I think a lot of people, that's why they're attracted to low-cost index funds,
Right.
where they just buy or attempt to buy the S&P 500, which may or may not work out for you. The problem is nobody's watching the hen house. Yeah. So you're invested in the market to buy, hope, and pray, hoping that it continues to go up. And we all know that we have years like 2008 and years like 2002 and the year 2000 and so on and so forth. It's those market corrections that change everything. Right. So what we got to do is we got to find a nice blend. Not super high fees, but also have an active management. We also don't want to go super low fees because we pay for what we get, right, with the low-cost indexing approach, because nobody's watching and managing your accounts. What we need is something in between. Reasonable fees, but actively managed portfolios that are built for these times today.
Or make them transparent. These fees need to be transparent. You need to be able to look at your statement and know what you're paying. And not only that, but maybe even get a deduction at the year end when you do your taxes. You know, current mutual fund expense ratios are not deductible. You know, but there's ways that you can include active management that can really help you. Put somebody in charge that can watch it. So if you've never had your mutual fund portfolio analyzed, we'd be happy to do that for you. Give the number on the bottom of the screen a call, and we will make steps to do that for you.
What a great story about a family coming in for one thing, and because of your professionalism, you were able to help them in that area and then turn around and help them in other areas as well, so that when all was said and done, they walked away with a terrific overall retirement plan. Well, folks, as you're watching the show, I got to ask you this question. What about you? What about you? Have you had the opportunity to sit down with a true professional who can give you an objective third-party analysis of what you're really paying? Help you take a look at the other areas of your retirement planning, your income planning, maybe tax planning, what have you? Have you sat down with that professional? Well, here is your opportunity. You do have the opportunity to sit down with a professional, again, provided you have at least $250,000 or more saved for retirement. Call the number on the screen. That's the drill. You know how it works. You pick up the phone. You call the number on the screen. Sit down with these professionals so that you can have a comfortable retirement. All right, now don't go away, because coming up, we're going to talk about our question of the week.
You're on the back nine heading for the clubhouse. Your dreams of spending time with family and enjoying retirement are just within reach. What happens if you end up in the rough? In these uncertain times, it's crucial to be prepared with sound advice. Russell & Company is one of the area's premier retirement planning specialists. For a complimentary consultation, call 1-800-392-4378. Russell & Company, helping you create a winning strategy.
Hi, my name's Michael Reese. I'm a certified financial planner who specializes in retirement planning. And for the last 18 years, I've been helping my clients enjoy financial security during their retirement years. And one of the hottest financial tools out there right now for retirement planning are annuities, but they're also the most misunderstood. And it's really no surprise why things are so confusing, because both the insurance companies and the financial media do such a poor job explaining what annuities are and when they should best be used. That's why I've created a series of videos absolutely free that you can watch in the comfort of your own home to teach you what annuities are and how they work.
Visit www.makingannuitiessimple.com today for a free video series with TV host and retirement planning strategist Michael Reese.
Welcome back. It's time for our question of the week.
The question of the week comes from Luke from Lansing, Michigan. My friend told me that they are invested in some kind of special life insurance policy that is 100% liquid, safe, and is supposed to earn 3 to 5% per year. Is there really something like this, or are they not fully informed?
Luke, that's a great question and an interesting one, because this is one of those newer, innovative strategies that some life insurance companies have created, frankly, because of the feedback of you and other consumers out there in the United States. A lot of people don't want to tie up their money in an insurance policy for 20 or 25 years and risk it in the market. So what this company does, or what this style of strategy does, it allows you to not lock it up for a couple decades, but also potentially earn a positive return without all the negative returns like you often find in other policies like variable life insurance. Don't forget, always use a life insurance company that is highly rated, that is financially sound, because at the end of the day, it's all about the claims paying ability of that company to back up their guarantee to you and to me. And normally, it's about a $50,000 minimum on these types of accounts. So it's not for the faint of heart, and it's for the people that have done a good job saving. And oftentimes, Curve, we see attorneys and doctors, high-income professionals that have maxed out their 401ks, their retirement plans. They've maxed it all out, and they're trying to find another source to build up some tax-free income or tax-free wealth in retirement. And that's often one of the best ways for us to do that.
Yeah, absolutely. With life insurance, especially as an estate planning tool, can be a very valuable part of the estate plan, because the original tax code was written in 1913. It had a life insurance exemption. That life insurance exemption still exists today. So it's one of the two things that is tax-free to Americans in this. So, life insurance can be actually a great tool. Now, keep in mind that there's lots of different types of strategies here. So whoever you're working with needs to have access to lots of different strategies, not just one, because you have a fingerprint that is unique as you. You also have a financial and estate planning fingerprint that's also as unique as you. So make sure that whoever you work with can look across the board and really try to get some solutions that are going to be perfect for you.
Absolutely. Great advice. And oftentimes it's because you don't hear things like this strategy, because maybe the person you're using is always telling you to buy term or to buy a whole life. Well, that may not be what's in your best interest. So maybe this strategy that Luke brought up may apply to you. Give us a call. Let's see.
Do you want your question answered on Retiring Well? Send us an email to question@retiringwell.tv.
All right, folks, it's my turn. Now I get to talk about how I really feel about these hidden fees when it comes to any type of investment. And by the way, you probably are going to have a pretty good feeling that I'm not going to like this stuff. And you'd be right. To me, I find this almost insulting. In fact, forget that. I find it completely insulting. I mean, come on. What kind of industry is unwilling to tell you what they're really charging you? No matter what you do, no matter who you work with, they tell you what it costs. I'm having a pool put in my house. And I know, sounds fun, right? That's a lot of work. But here's the point. The contractor tells me, here's what it costs. He lays out all the prices. Are there any hidden fees there? No. He lays them out. I know what I pay him. I know what I get. If I buy a car, I know what I pay. I know what I get. It doesn't matter what I do in life. Whatever I buy, if I contract the services of a professional, I know what I pay. I know what I get. Yet, why then does that have to be so different when it comes to your investments? Why is it that when it comes to your investment portfolio, that the people who manage your money do seemingly everything in their power to not tell you what they're charging you, to hide what they're charging you? It's almost like they know they're ripping you off, and they don't want to admit it. And by the way, how many times have you seen these big brokerage houses get fined millions and millions of dollars for basically doing things that are not in your best interest? So I guess this shouldn't surprise us. Nevertheless, do you find this to be a bit ridiculous? I mean, don't you find this to be kind of awful business practices? I mean, what's so bad about your money manager telling you what they charge? Okay, as you watch a show, right, when you talk to or when you see the people on the show here, they're all happy to be transparent. They're happy to tell you exactly what they charge. Why is it that all the big Wall Street firms don't want to tell you what they really charge? Why is it that all the big mutual fund families don't want to tell you what they charge? Why can't they be upfront and honest with you? You know, our government has tried on multiple occasions over the years to try to peel back the curtain, if you will, and have these companies tell you all the fees that they're charging, not just some of the fees. You know, when you open up a prospectus, you only see some of the fees. Remember that Barron's article we talked about earlier in the show? Well, the government's tried from time to time to say, hey, let's have these companies pull back the curtain, show all their fees. But of course, the lobbying efforts by these companies, they have tons of money, so they can pay lobbyists tons of money. And you know how it works in Washington, D.C. Whenever tons of money flow in one direction, you know, our Congress seems to kind of capitulate and flow in that direction. So why are they so afraid of this? I mean, you know the answer. I know the answer. They are charging you an arm and a leg, and they just don't want to admit it. Now, the way I look at things, I don't ask, you know, these places to be the cheapest place on the block. I don't ask my money manager to be the cheapest money manager on the block. In fact, I don't want to work with the cheapest money manager on the block. What I want value. I want value for my money. If I'm going to pay a money manager X number of dollars to manage my money, I'm okay with that. They've got to earn a living. I have no problem with that. I'm sure you don't either. But they should provide value for what you pay, value for what I pay, and it should be very clear and very transparent. That's the way it should be. And that, my friends, is what you deserve. You don't deserve to be lied to. Again, you want to talk to someone who will be transparent with you, call the number on the screen. I mean, what more can I do? Call the number, leave your name, leave your phone number, talk to a retirement planning specialist. I can promise you, you'll be glad you did. That's our show this week. Have a great weekend.